Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get right into what happened in markets today. All right, we had canola drop 270 on the November to 691.20. Again, we talked about moving to the November as the front month contract, as we are seeing more volume and open interest on that contract at this time. We are still seeing a carry to the July here. I'll show you some charts here in just a second. The wheat complex had a rough day today. Minneapolis down 9.25 to 613.25. Kansas was down 10.25 to 527.25. Chicago was down 7.5 to 534.50. As you can see there's still a premium trading in the Chicago pit versus the Kansas pit. We'll show you a couple maps that might explain that as well. Soybeans up $1.75 today at 10.57 3/4. Corn up 5.25 today at 438.75, coming off of some lows overnight. Canadian dollar 73.07, up marginally today. Live cattle up to 218.20. Feeder cattle up to 313.15. All right, let's get into looking at some charts as per usual. We'll start with canola. Today, canola had a bit of a doji day today, a bit of a neutral day. It was up earlier in the day, came down and settled right in the middle of where we see it right now at 691.20. Yesterday, again, this market made a new high. We reported on that in our video. That's still a positive sign. But there are some kind of canaries getting sick in the coal mine here as we look at some of the forward months, like, sorry, not the forward months, some of these past months. So July here, we saw a peak back in earlier May, and it hasn't been able to muster a new high in that market since then. We've since been struggling to stay above the 20-day moving average, which is not necessarily a good sign. I've overlaid Fibonacci retracement onto the July here to show that we could easily come down to the 640 to 650 area without really breaking trend. There, that's where the 61.8% Fibonacci exists. And we also see the 200-day moving average exist kind of in that area as well. So, kind of looking at where this could go, at least, when looking at the dichotomy between November and July, here's the spread that we've seen since the beginning of May. We saw it top at $50 a ton between the July and the Nov. That has since sunk to 18. So what we are seeing is a little bit of gains in the November, some losses in the July to kind of even out that spread as we move towards the July delivery period or the June contract expiry month. So that's something to keep in mind, as we could still see some contraction in the spread as we move the November towards the front month. Now, there was some thesis, including my own, that if the trade was short physical canola, that we may have actually seen a bit of a squeeze on the July, meaning that the July contract would come to delivery and we'd see some of the long holders call for delivery. That would kind of create a bit of a squeeze to the shorts. I don't know if we're seeing that yet. I don't know if we're going to see that. It may be a little bit more muted than what I originally anticipated. Looking at, just continuing on with spreads here as well, we are still seeing actually the Minneapolis spread, or Minneapolis less Kansas, can continue to widen. It's still at 86 cents now. This isn't the largest spread by any stretch of the imagination that we've ever seen in this. We've seen over $2 a bushel at certain points. But the advancement of this since mid-March is kind of showing how the market is still putting premium inside of the Minneapolis market, even in the face of falling markets. So, when we're looking at what's happening as far as, shouldn't spring wheat be getting a premium, particularly if we're seeing a large Kansas crop? Yes, that is true. But we are seeing the wheat complex come down as a whole. Here's what Minneapolis wheat did today. Initially, it had opened gap lower, down at around 617 or so. It hammered, down to about 606. And then rallied back to fade the gap and kind of closed in between. So again, this is a bit of a doji candle, which is a neutral. Well, it would be neutral on the day, but of course, seeing the losses here, that does break some trend lines. It did test the 20-day moving average, which looks like it's attempting to converge on the 50-day moving average here. That would be over here. So, we could see, this turnaround after today. if this 20 and 50-day moving average kind of hold here as support. So I'll get my laser pointer here. This could be act as support here if we see it continue to bounce off of this level here. But there are some fundamental reasons why this is happening. Of course, we saw spring wheat good to excellent conditions rise to 53% good to excellent. Now, depending on which estimates you looked at, I read some that was calling for 51. There was others that were calling for 52. Um, it looks like there were more in 51 camp than there were in 52, and that the trade hadn't really adjusted to rising crop conditions. I don't think it's surprised by anybody that the crop conditions were better, particularly given some of the rains in the last little bit. But I think the degree to which it gained caught the market a little bit by surprise, which does lead me to believe that that those who were looking for a 50, 1% good to excellent increase were maybe in the majority. Kind of looking at the observed precipitation also gives us some clues here. Lots of precipitation here in Kansas and Missouri and Oklahoma, et cetera, et cetera. So we are, lots of precipitation in there, particularly when the heads were filling. We've seen some precipitation here in Nebraska and some of the other areas where there's, winter wheat growing around the lakes. So there hasn't really been a problem with precipitation in the last couple of weeks in this market. Looking at Kansas here as well, we did see Kansas break below that 20-day moving average. That is a bearish signal. It did break a trend line, obviously, as well in the last couple of days. It tried to test this 50-day moving average and even kind of came close to this descending trend line here. So this trend might still be in place. As well. Kind of looking forward into the weather, a little bit benign. We want some of the weather here in this winter wheat growing area now to be a little bit less precipitation. This is the 5-day forecast, the 120-day forecast that was run at noon today. And we still see some precipitation coming into some of the spring wheat areas in North Dakota, in Montana, and even in South Dakota and Minnesota. So not a bad outlook for spring wheat coming up as well. As you can see, Canada still looks dry in this precipitation forecast, which obviously continues to be a concern for us here in Western Canada. But from the global perspective, or from the trader's perspective of wheat, the U.S. matters the most at this point in time, and that is what is driving some of these markets. Just to kind of show you a winter wheat harvested scale here, I'll just point out a couple of quick things. The average obviously is or this week we have 4% harvested versus an average of 7. The big ones here, we haven't really started harvesting Kansas even in the last couple of weeks. So at this point in time last year, we had 4% of the crop harvested, and average is 1%. So we're a little bit behind average here, which means that those rains were really helping, not only helping to fill the heads of the wheat, but also delaying harvest to some degree as well. So just wanted to kind of share that because it is important when looking at the staging of this crop and when the rains came. All right, we got Manitoba crop progress report today, or Manitoba crop conditions report today. As you can see, almost 100% harvested here, or effectively 100%. We were at 92% last year. The average is at 94. So really good pace on the seeding in Manitoba as well. As far as some of the commentary they put in there, winter wheat, good growth. Most advanced winter wheat is heading. I've actually seen a lot of this anecdotally. The fields look pretty good in much of the province. The earliest seeded spring wheat crops are beginning to stem. Majority are at the 4 to 5 leaf and tillering. Oats and barley are at the 3 to 5 leaf stage and tillering as well. Oilseeds, canola ranges from just emerging to early rosette. The majority are at the 4 leaf stage. Some flea beetle feeding is mentioned, but crops are outgrowing the damage pretty quick. Field peas range from 4 to 7 node range or node stage. Most advanced soybeans are in the second trifoliate. So, the crop in Manitoba is progressing well with risks being lowered, particularly after the rain that we saw over the last couple of days. Here's the 2 week observed. Again, this is just kind of um, a magnification of the last map that we showed you on as far as accumulated precipitation. You can see into today. Southern Manitoba got quite a bit here. It's in good shape now. It needed that rain. Um, and we got a lot, particularly here around Winnipeg and in to the close to the southeast area. Lots in the Westman and even eastern Saskatchewan region as well in that period of time. But as you can see, a lot of the western part of the prairies is still really dry. Speaking of dryness, drought, Rostov in Russia, which is a major producing state of, wheat and canola and sunflowers and all those kinds of things, it is has now declared a state of emergency. Just to kind of issue where that is, this here is kind of the Rostov region. Hopefully you're seeing my drawing here. Um, that's where a big chunk of the wheat crop is grown. That is an important part of the agriculture area of Russia as well, and into the eastern part of Ukraine here. This here actually is Ukraine. Where of course there's a war waging, and there's a lot of wheat grown in this area as well. So those areas are of concern and could lower not only the production of wheat in that area, but also just the amount of wheat that is in an exportable position or which won't be affected by export quotas, things like that, which can come into play when you have um, production issues, particularly in Russia. All right, talking a little bit here about vegetable oils. India and China are seen aggressively buying palm oil in the short term. This is not necessarily a shortage concern, but more of a pricing action. Palm oil prices had gained nearly 20% last year, but they have shed quite a bit of value this year, about 12% now, which kind of provides a bit of a buying opportunity. So here's where we are at right now as far as palm oil futures. Here you can see closer to the beginning of the year. This is February here. And forward, we've seen reductions in palm oil futures, which has kind of created the Walmart rollback pricing. And it is creating some demand in that space. All right. That's all we have for you today. Thank you very much for joining us today. We will see you again tomorrow. Stay safe.